Have you ever had questions about VA loans? Have you ever wondered if you can actually get answers from the VA? Maybe you find it intimidating because it's a big government entity, or at least that's your impression of it. I've found in the past that that's absolutely not the case. And I'm so excited because I had the opportunity to interview John E. Bell III, who is the Executive Director of Loan Guarantee Service for the Department of Veterans Affairs, as well as our Colin Deaso, who is the Assistant Director for Program Management and Data Integration for Loan Guarantee Service for the Veterans Benefits Administration. So if you've wondered what it's like to get answers from the VA, then watch this interview. Now, before the interview, I actually sent out an email to some of our followers and asked for questions that you would like answered. And I was thrilled because we already had some great questions, but the quality of the questions I received back were phenomenal. So we were able to answer most of them. And for those of you who actually sent in the questions, thank you so much for responding. They were phenomenal questions. We got through almost all of them. And all that means is we need to have the Director of VA Loan Guarantee, John E. Bell III, as well as our Colin Deaso back again another time. But in the meantime, here's the interview. I hope you enjoy it. Please, we put 3 of the links that they recommended in the description below. So please use them. The VA is actually phenomenally friendly. I found them, as I mentioned, great to work with, easy to use. And if you're not using the VA loan, you're actually doing a disservice to the veterans and you're missing business. And in this economy, no one wants to miss business. I'm Elysia Stobbe, your Mortgage Millions mentor, and I help mortgage loan officers make more money by working smarter instead of harder and creating a business that they love while serving others. Please, if you haven't already shared, please share this channel with another loan officer or a branch manager or a CEO or a vice president of sales at your company. There's phenomenal information. I'm sure you've enjoyed it. Click the like button, click the share button. This is a great interview. I'm so excited for you guys to see it. Thanks so much for all your awesome questions. Oh my gosh, I'm so excited to ask them. I'm Elysia Stobbe, your Mortgage Millions mentor, and I am so honored and thrilled today. When I think of veterans and I think of the lending industry, the VA loan is one of the most useful. I think it's one of the best loans out there in terms of guidelines, in terms of protecting the borrower, as well as the lender. And there's so many great things. We're not going to talk about all the great things about the VA loan today, but we are going to talk a little bit about the economy, housing, VA benefits, VA appraisals, and a few different questions we have also from the followers. So I'm super excited to get into that today. And with that, I'm going to read the entire bio for John Bell. I'm so excited that he's here. All right, holy cow, listen to this resume. John E. Bell III, Executive Director, Loan Guarantee Service, Department of Veterans Affairs, is responsible for delivering VA home loan benefits to his fellow veterans. John oversees over 800 loan guarantee personnel worldwide. Following his successful career in the mortgage industry, John began his VA career in 2010. Under John's leadership, home loan volume has increased 600%. With a record-breaking 1.44 million veterans closing on VA guaranteed loans in the fiscal year of 2021. VA share of the mortgage market has grown from less than 2% to over 13% with no increase in staffing. John served in the U.S. Navy during Operation Restore Hope and Gulf War. Following his service to our nation, John began his 20-plus career in mortgage finance while attending Lambeth University in Jackson, Tennessee. A recognized leader in the industry, John frequently initiates collaborations with officials of housing programs at other federal agencies and leaders of industry organizations. John's experience has influenced Loan Guarantee's transformation to better align with the fast-paced mortgage industry He is dedicated to Loan Guarantee's mission to provide the highest level of service to each veteran who is purchasing, refinancing, adapting, or retaining a home. John looks forward to continuing his work to best serve his fellow veterans by ensuring that a VA guaranteed home loan is always the best product of choice. John, thank you so much for taking the time to join me. Also, I'm so excited because we have Colin Deaso with us as well. And I'm going to tell you all the amazing things that Colin's done in his career as well. Our Colin Deaso, Assistant Director of Program Management and Data Integration for Loan Guarantee Service, Veterans Benefits Administration. Colin Deaso was named Assistant Director of PMDI in January of 2021. He is responsible for administering the sustainment and modernization of data and technology assets on behalf of the VA Home Loan Benefit Program. He provides leadership for 200 plus VA staff and contractors and manages an annual budget exceeding $150 million. Prior to this role, Colin served as Chief of Loan Policy, responsible for the implementation and Prior to this role, he served as Chief of Loan Policy, responsible for implementation and administration of statuses, rulemaking, policies, procedures, and transformation efforts nationwide for both the VA Home Loan Guarantee and VA Direct Lending programs. Previously, he served as a financial analyst, trust specialist, and program project manager for loan and property management. And prior to joining VA between 1998 and 2009, Mr. Deaso worked for Fannie Mae in various capacities, including market programmer, market producer, program manager, process engineer, external consultant, and business development roles. Colin is a graduate of the Harvard Kennedy School Fellow Program, the Partnership for Public Service Excellence in Government Program, and maintains several professional certifications. In addition to having an MBA from the George Washington University in Washington, D.C. Wow, I am so graced and humbled to have these two gentlemen in my presence today, and what a great opportunity to interview them, to find out how more loan officers and branch managers can help more veterans, because this truly is a veteran's benefit, the VA loan. Gentlemen, thank you so much for being here. I'm so excited to talk with you. Well, let's get started right now with John. So the first question I have is, what's your take on the current economy? Do you think,
you know, it's a little ironic right now because, and what I mean by that is you've got appreciation that continues to keep, this market up and afloat. And one of those reasons is because you've got not a lot of people that are wanting to get out of that 2.5% interest rate that they got into in the summer and last year, and so you see them staying put. You see some of them using cash out refinances, even at a higher rate. You see a lot more activity maybe in the HELOC area, if companies can find HELOCs that are available, and so you see that appreciation still, still not declining as rapidly as you would, though you see a lot of originators and a lot of realtors going, oh my goodness, there are no applications because we're not seeing a whole lot of movement. So, in one respect, that's housing appreciation staying where it is and not declining rapidly is a good thing, because that is really what's going to hurt our ability to help borrowers stay in homes, because there's really not a magic wand. And when you've got such a high rising rate environment and you've got a depreciating asset at the same time, that causes for not a lot of programs out there if a borrower gets behind to help them stave that off. Because usually, you've got loss mitigation options, that are available, but a lot of those loss mitigation options are kind of off the table, because if you're at 2.5 and you fall behind and you're 6 months behind, and now you're going to go to a 7% or a 6%, that fluctuation in payment is going to be, that payment shock is going to be huge. So what do you do? And so I think that while in one respect, the irony of it is that one respect, we're glad that appreciation isn't rapidly declining the way that it is. On the other hand, what are we going to do to sustain the market from an origination standpoint and for borrowers that want to get into homes? And what's that going to look like?
Excellent. Thank you. So along those lines, let's talk about housing supply, right? Because the current economy and housing supply go hand in hand. And, I think I've seen a lot of information that we are still in a housing shortage. I mean, if you look at the number of new housing starts by decade from the 60s, where this is from 2010 to 2020 is the only decade that we're actually down. Obviously, some of that was absorption of some of the housing supply that we had too much of, right, in 2008. So that's already been absorbed. And so now we're definitely down. Any thoughts on housing supply? And do you agree with that? Do you think we're also still in a shortage? Do you feel like there's enough housing for the military out there as they move around? And obviously, if they can stay on base, that's a different matter. But for those exiting or retiring, or even if there isn't enough supply on base?
Yeah, I think I agree wholeheartedly with them. As housing supply, of course, is certainly down, and you've got, so we just talked about the market and the irony in the market, but there's also the issue of buying power, and so as rates continue to rise, the buying power of the borrower continues to decline, because it's going to cost them more to get into a home. So say you got a $350,000 home and your rate went from 3% to 7%, and you're buying, so your payment is going to shoot up, $600-700, from what you originally had paid. So how do you, even if there was a housing supply that you could buy, how did you position yourself well enough to be able to be in a market that you are ready to buy? And that's really where the VA program has seen a lot of increased appetite and in a positive way. And what I mean by that is the borrower characteristics are better now for a veteran than they ever have been in the history of the program, meaning that even though there's not a credit score requirement, our veterans have equal to, if not better, credit scores than the conventional marketplace. They have debt ratios that are the same, if not lower, than conventional. We have a residual income requirement over and above what the debt ratio is, meaning that we look at total debt, not just what's reported on the bureau, and they're meeting that in spades. And then you throw on top that we've got an increase of down payment that has occurred for veterans, where they're averaging $54,000 in down payment, and we haven't seen that before out of the VA program. So our veterans have prepared for this moment. They are well positioned for this moment, and if we could get them into homes and win contracts, we certainly could see where where this is a good time for them to buy. The issue has been for them in the peak of the time to buy, when rates were at 2.5%, 3%, and we had all these cash investors in the marketplace. Veterans their bids weren't even being picked up, and so they weren't even being looked at by sellers. And so I had to testify on the Hill in December of last year, and then again in May of this year, on how do we better prepare service members, how do we educate realtors, originators better so that they can sell the ability for veterans to compete in that marketplace. And I think we see that playing out now, where you used to have 15 contracts for a property, or 15 bids for a property. Now you're having 1 to 3. They're getting picked up. The problem is the number of homes that are competing has also gone down as well. So you're in this quagmire.
Yeah, so it's interesting because I did have several clients last year that were veterans and qualified for a VA loan as well as conventional. And unfortunately, to get those, I feel like unfortunately, because I think VA is the better loan for the borrower, they had to do conventional in order to get that contract. Now, currently, that was last year. So currently, it's not an issue. So, and it's interesting because I do have a client that's putting down several $100,000, which also made them look more competitive. And they did a VA loan because, they qualified for conventional as well as VA, and they wanted VA. And so we were very glad that the seller took that offer. And I do have some questions about appraisal turn times. And I will say it's interesting because one of my viewers, Jeff Guthrie, since you brought up VA residual income calculation, his question was, I would like to address why VA mortgages loans outperform any other product. He thinks it has to do with VA's required residual income rules, which is definitely, you alluded to. He said also, what's the biggest difference on how VA appraisers find value compared to FHA or conventional? And to just what you mentioned, realtors and sellers tend to shy away from VA offers based on all false information, right? We just need to educate them. Simply put, VA loans hold higher standards than both conventional and FHA. So it's interesting because he definitely just supported everything you said. It's a constant education process, I feel like. And the irony is, with one of my deals last year where they would only take conventional over VA, where the borrower qualified for both, the seller was a veteran. So it's like, come on. Where's the respect there? Well, I was shocked because I hadn't encountered anything like that before with the seller being a veteran. So are you able to comment on the VA appraisal turn times? I will say that I think it's a great selling point actually for the VA because especially in the last 18 months, conventional turn times were backed up to 15 or 20 days, and the VA was right there with the 10 business days. So I think it's fantastic, but I wanted to ask you the question as well.
I love this question, and to be honest with you, it's probably the #1 question I get asked on a daily basis. And speaking from someone who spent a majority of their time on the Hill the last 6 months, having to explain this same question, I think we're well prepared. Before I get into the appraisal part, though, I do want to say one thing. This is a benefit program, and we treat it as a benefit program. And what I mean by that is we look at our lenders, our servicers, and I say but they don't work for VA, right? They have a 25% guarantee that VA puts, that VA puts up, to help them mitigate risk. But it's not 100%. It's not 90%, like some of the other agencies. It's 25%. So lenders own 75% of the risk to do a VA loan. And our ability to listen and understand their needs, to be able to then in turn provide the product to veterans, is key for us being able to improve processes, add people, change technology, which Colin will talk a lot about here in a little bit, I'm sure, so that we meet that demand. So the appraisal part of the piece of that is, well, first of all, you asked the question of what are the things that make VA special? One of those things is the residual income requirement, and it's one reason and one reason alone. It is more important for us to keep a veteran in a home as it ever was to put them in one. So what the residual requirement does is it allows us to ensure that there is a cushion when the veteran moves in, that if a financial impact occurs in their life, that they're able to stave off that default better than than their competition of other products, right? That protection they will not find anywhere else. The other piece is in the appraisal process, we get involved really in 3 points in that appraisal process. The first point is the round robin system, the way that we ensure that there is a true separation between origination and the appraiser being able to set the correct value at the beginning of the process. Mm-hmm. Part of that, though, is we have Tidewater and we have an ROV process. Tidewater is appraiser receives an order. Before the appraiser even gets started on the appraisal will reach out to the lender if there is a problem, if they foresee a problem with value. So remember, they have the contract, right? Because that's what starts the application. The contract is like that first phase. That's when the bells and the whistles start going on in the process. So they have the contract. If that contract price is going to be hard for that appraiser to substantiate, the appraiser will contact the lender and say, hey, we have a problem here. I need more comps because I'm not going to be able to get there with the data that I have. So that's step one. Step two is once the appraisal is done, then we have a notice of value process where we look at that appraisal, or the lender looks at that appraiser from a staff appraisal reviewer that we have trained, and is able to assign whether or not that value is adequately represented. Then we have technology that we can run behind it that says, what are the key issues with that appraisal that we see? So when we do if there's still a problem and the veteran wants to challenge that value, there is a reconsideration of value stage where the veteran can still come back to VA and say, I don't agree with the appraisal value. We're the only agency out there, the only loan out there that does that. So we have 3 different safety mechanisms built into this process where we ensure that the value that is started at that process at the time is substantiated. So we feel very confident about that.
Yeah, I agree. I think it's a wonderful practice, a set of system in place to protect the borrower as well as the lender. And along those lines, we did have a question from Dino Clathis that asked, when an appraiser evokes Tidewater, what are the best practices to utilize to get a reconsideration of value?
Yeah, comparable sales is number one, right? And comparable sales that are comparable to your property that you're trying to buy, meaning that don't go 3 miles away and expect for that comparable to be comparable, right? It needs to be close to in proximity to the subject property. It needs to be light construction. It needs to be the same type of bedroom, bathroom count as close to as possible. And because we need to prove that those comparables are not inferior to the comparables that have already been used on the appraisal. So
Right.
if we can prove those out, then we can change value. And we have changed value. When we change value, by the way, we average $26,000 in a change in value when a reconsideration of value is done on a property. So think about that. That is a huge average. So being average, it could be 50,000 change, right? But that's the average amount. Now timeliness, real quick. Timeliness is 9.2 business days for the entire year is what we average nationally. And for the month of September, it was 8.1 business days. So our issue is there is no industry data to benchmark against what's an acceptable time frame for the industry. Mm-hmm. And VA has been fighting for this forever. We would love for the rest of the agencies to come together, the rest of the market to come together, and have one set of rules, one benchmark as to what's an acceptable time frame to deliver an appraisal. And we don't have it. All we can do is report what VA has, and most transactions aren't closing in 8 business days. But hey, if you can find them, great. I'm sure since this was the average, I'm sure that you had that appraisal delivered to you in 48 to 72 hours so that you could meet that time frame. And that's wonderful. But to have a national average of 8.1 business days, I think for an appraisal is not that bad.
Well, and I would also add for the reinspection. So for example, we have this devastation in Florida, and several of the homes we recently closed or getting ready to close were in FEMA disaster areas. And I have 2 right now that are VA, and we reached out to the appraiser, and they're getting there the next day. So, I mean, I can only say positive things, which makes me super happy because like I started off with this, I think the VA is one of the best loans, and, is definitely a benefit. So along the lines of benefits, what VA loan benefits should loan officers know about?
One, the cost, right? So VA has, again, another one of the only programs that manages the cost associated to what a lender can charge. Mm-hmm. Now, that cost is associated to what the lender can charge. And a lot of the misconception about VA is we're not talking third-party charges. So if you've got title fees, which you can pick what title company that you want to use, right? We certainly do not get involved in that. You have to pay an appraisal fee. You have to pay, that is a fee for service. And a fee for service outside of lender fees, that is, as long as they are reasonable and customary, we'll accept. We're talking about lender fees alone. So lenders have certain fees they can charge, certain fees they cannot, or they can lump sum and a 1% to all the fees that they want to charge. And then we have some lenders that charge 0 fees. And so I will say that cost is one thing. The other thing is the protections that are afforded to veterans after they close, because that's true and real. If you are running into financial difficulty, we have loan technicians that work at VA that can help you navigate that with the servicer and in those conversations. And again, I think we're one of the only ones that, as a matter of fact, I know we're the only ones that do that. And then the other thing is, if you ever want to talk to VA, how many agencies I'll just put it out this way. How many corporations have you ever called where they're answering phones in less than 1 minute and you're talking to subject matter experts, not people that our first line, then you get transferred to a second line, then you may or may not get transferred to the third line, then you get hung up on, then you're upset, then you call back again, right?
Then you're like, escalate, manager, please, can you escalate? No, not since COVID, for sure. I mean,
Exactly. So one minute or less, we're answering our phones with our subject matter experts. And this is from a staff that they love what they do. They're there as a mission to support veterans, because I promise you, a lot of times answering the phone and doing your normal job as a subject matter expert is probably not the first thing that you would choose to do in any other job, right? But they do it, and they do it because they love what they do. We've got a great staff that is there to support veterans.
That's amazing. And I noticed on the bio, your bio also, the huge increase in the number of VA loans, and yet no increase to staff, which is impressive. And to still hold those quality controls in place is phenomenal.
So last year was the first year we were able to increase some headcount, and it wasn't much, right? It certainly wasn't a lot, but it was the first time we actually could increase, some people to help. Now, granted, we have increased a lot of the programs that we do. It's not just the guarantee. We also have increased legislation that we have our a program called Special Adapted Housing that we help our most severely disabled veterans be able to navigate freely into in a home. And so we go in and kind of retrofit or give them a grant, to retrofit that home. And that can be used in conjunction with their guarantee. So that has increased exponentially. So we've had to increase some staff to be able to, to support that as well. So, it's positive news, but certainly we have not increased staff the way that we've wanted to. The exciting thing real quick though, is, for the first time, we have been able to, put together a new training staff. So we went from 2 trainers, and that would be for all of our external stakeholders as well as internal, to now we'll have 9 trainers. So we built a training staff of 12, which is extremely exciting internally for our staff as well as externally, because that's going to give loan officers, it's going to give realtors, real estate agents, appraisers more educational resources to be able to utilize, where they're not having to spend their own money to use that information. That information will be online and free to everyone.
That's fantastic. So that actually brings up another question that actually Marshall Sparkman asked. Is there a more formal training program for loan officers that can better educate veterans? He actually said he created it privately, and he's rolling it out next month, where he's teaching lenders how to educate realtors and veterans. But it'd be great for the VA to stand behind some sort of certification, because we know that that's his question. But then I would also say, we know that military relocation professional designation exists, but it's through the National Association of Realtors. I have it, but that's because I became affiliate and all that. But it'd be great if there was one for lenders. And then also Marshall just added, continuing to serve my fellow veterans is my why in life. So I want to just add that. So do you think that, is this what you just mentioned, is that a rollout, a beginning of a certification program? Because everybody likes to have a certification and say, I did this, I know this, I can help you.
That's our hope. We are going down the certification path. Now, what phase that's in, is that a phase 1 or a phase 2 or phase 3? So in other words, is that year 1, year 2, year 3, year 4? We haven't worked that out yet, because when you go from 2003, that's when we first had 2 trainers, all the way to now, 2020. Well, it'll be 23 by the time we, get everything out. So 20 years we got a lot of training we got to catch up on. We got a lot of materials we got to catch up on. So, you know, it'll happen. But hey, we're going to talk about that, Marshall. Hope to see you at our lenders conference in May of next year. Look out for more to come. But I hope to see Marshall again. He has attended some of our lenders conferences in the past, so hope to see him there.
Thank you. And I will say, if you need help with training, I would love to help. I think it's very important. So if there's anything I can do.
Be careful what you volunteer for, because I'm going to take you up on that.
I welcome it. I welcome it. So I think we've covered most everything. I did have some other questions from some viewers. Restoration of benefits or dealing with a veteran that doesn't have full entitlement. We're talking about benefits that loan officers should know about. Any tips there? How to help them with full entitlement? I mean, they can reach out to the VA, but are there any other suggestions?
We've got information online. Reach out to VA. That is a question we could talk about for 30 minutes to an hour, right? Okay. So, you know, those are very specific and unique to individual. Yes. You know, when you get into those conversations, so please call VA. We will walk you through it. We'll help you, and that's what we have people there for. Fantastic. Colin, anything to add on that? Colin used to actually, one of Colin's old roles was chief of policy. So if you got any policy questions, right there, that's your guy. He knows far more about it than I do.
Used to be. No, I don't have any. I mean, I think the advice is sound. You know, call our 877 number, speak with a loan specialist. You know, let's dive into the specifics. I think is really the best advice. It's very nuanced, so we want to make sure that, you know, we're doing right by the veteran and they're clear on what their remaining entitlement is.
Excellent. And speaking of policy, so Colin, I know that I found the VA to be very, very helpful when you have a particular situation like this. But I did get a question from Carolina Girl. Why can't soldiers returning to civilian jobs count their military experience as job continuity for stable income and employment test? It's such a difficult conversation when the veterans find out after they've been in combat roles. I've never had this issue, but apparently this person did. She says, what jobs, if any, would VA allow to translate for immediate home purchase when planning to return to civilian life? Like I would think that would be easy to make that transition, but do you have any other suggestions? Because clearly as a loan officer, she's had some challenges.
Yeah, and sorry, John, did you want to?
No, you go ahead. I'll fill in. I mean, you know, anyway, you go ahead. I
thought we were on a little bit of policy. So.
Well, all roads lead to John. But I mean, if the question is in terms of underwriting and transferable skill sets, I think a lot of the duties in the military are easily transferable, and those duties would qualify, you know, in terms of experience and likelihood of income and continuance of income. So, and we see that day in and day out. You know, again, it's a nuanced conversation, but we leave that in the hands of the lenders to really identify and determine what types of incomes and what types of experience lend themselves nicely in a particular, you know, job market or regional area to qualify for income. So I think that's you know, we haven't seen any kind of systemic issues in terms of you know, particular jobs and duties not being able to be transferred. So I think it's really a good news story in terms of, you know, when that transition happens for the veteran, that they're able to enter the workforce. And I think we should also kind of talk a little bit about some of the benefits that VA offers in that regard. I'll leave that for John.
Yeah, I mean, I think, again, remember this conversation about it's more important for a veteran to stay in a property as it ever was to put them into. So I see this come up sometimes when you got, let's say you got, you know, E2, E3 gets out, you know, after a 4-year or 2-year enlistment, they get out and then they go and they work for maybe someone that they know, and now they're making $100,000 as a manager over a construction area or something, right? at some point in time in their history, it would be nice for you to make the tie back into how did they get the experience to lead whatever office that they're leading, right? So that they went from making what they made to making what they're making now. We would ask the same questions as an underwriter if you did that in the private sector. It's not, so try not to think of it as military to private, to private sector, and just because you're moving from active duty, you can't utilize that that experience. You just think of it as how do you tie back the experience of that individual to the new role, and how are you going to make that tie-in together where it makes sense? So I think that's going to be the challenge for the originator to make those tie-ins.
Fantastic. Thank you so much. Just a couple others. So VA loan underwriting tips for loan officers. Any suggestions besides read the guidelines? So that's how I learned when I first got in the business. I had any questions, my manager was like, go read the guidelines. Okay. But I did. So what you tell me, what do you think?
So we're trying to make it as easy as we can. Look, I will be the first to admit the WARMS, we call it WARMS, but the way that we present the handbook historically has not been the easiest place for you to gather information. I know, I admit it, right? But we now have the entire handbook in a PDF form that's searchable. We're continuing to build that out to make sure that as we are able to update the handbooks more frequently, we're trying to make sure that we're going to give originators and lenders a easier path to get that information. So you can go right now on our website. It's the first one. So it's easy to, like, if you've been originated for a long time, to follow your same old path and go to the old way. But at the top it says, all in one or something like that. So it's a PDF. So if you just download that PDF, then you search by word, and it'll come up on what you're looking for, and you're looking through the entire chapter. I mean, from the entire handbook, not just the chapter. So that'll make it easier. I don't know. I get a lot of questions about this, so I know that a lot of underwriters don't know that that's available. And originators definitely do not know that's available.
We'll make sure we have that. We'll put that link in the description.
Perfect. So that's out there. Follow our circulars. As we update circulars. We do circulars because it takes us longer to do a handbook than it does the circular. The circular is supposed to be incorporated into the handbook by a certain amount of time, which is why we have that expiration date, at the bottom of the circular. But I'll give you an example. In July 27th, talking about appraisals, right? We changed the way that the ability, for the veteran to have discussions with the lender and the appraiser on whether or not a desktop would be warranted, a desktop appraisal would be warranted versus doing a full. If the veteran was putting 20% down, or if it was taking them 7 business days and we could not find an appraiser in an area that they lived in, like a rural area, that we didn't have a lot of appraisers in, and it was taking far too long to find an appraiser. We actually put that out on July 27th. I can't tell you the number of people that I talk to on a daily basis that still don't know that it's there. And I'm like, it's been there since July. We were hoping you're using it, right? And so please check our circulars. We have a Gov Delivery. We have a Gov Delivery system. You can just sign up for any circular that goes out. It'll actually go directly into your inbox. So you can get updated on anything that's happening at Loan Guarantee. As soon as it hits the streets, you'll get it right into your inbox. You can subscribe to that as well.
I did want to, I wanted to add, Elysia, our policies and our handbook and the circulars that John's mentioning, I think are certainly reflective of the fact that we are a benefits program, and we, to the most, to the maximum degree possible, try to minimize the hard stops, right? We try to actively minimize the places where, we put the lender in the position that they have to say no. And I think, what that means, the converse of that is that a lot of times we're saying yes, right? The policies are not, there to limit, right, the benefit. We want to expand the benefit and offer it to as many folks as possible. And I think that's kind of a different mindset compared to, perhaps other agencies, other investors, other guarantors that we offer that wide latitude to really lean in. And I think that's reflective of the program, the fact that we are a benefits program, and we do work with our partners in the industry to deliver the benefits. I think, John has been very strong on that point, and I think it's worth mentioning.
That's a great point, Colin. And one more thing, look, if you're an originator out there and you believe in a file, talk to your underwriter. Don't just go off the AUS, right? Manually underwrite the file. Go back to how we used to function as originators. You owe that, to veterans. You may save yourself 2 or 3 files a month by doing that. We are going to look at nothing but positively, and you're in a lender's ability to manually underwrite. And as a matter of fact, we have a lender scorecard for every lender. One of the key points on that scorecard that I look at when I sit down with CEOs, when I sit down with EVPs of underwriting, I look at how many files did you manually underwrite? And that tells a big story of the type of VA loans that lender is doing. So don't feel uncomfortable in doing that, right? That look at the file holistically. That's what the program is all about. And if you have questions, call VA.
Yeah, I've always found VA super helpful. So you mentioned saving 2 or 3 files a month. I can't tell you how many loan officers wish they had 2 or 3 VA loan files a month right now. And one of the questions we had from John Hayudiokovich was, how do you advertise and where do you market to find veterans? Any suggestions?
I think veterans are in every marketplace. They're in every community. I think that there's not like this pocket of veterans that only live near bases, right? The one thing that we have found, and to be honest with you, with the passage of Blue Water Navy bill, now veterans can, and this is another thing that is asked of me a lot that you would think people would know and hope people would know, is that veterans can buy wherever they want to now. They're not limited to high-cost counties. To non-high-cost counties. They can, if you're a veteran and you want to buy a $5 million property and use your guarantee, you can use it now. So this has just opened up the aperture for more veterans to get into more properties wherever they want to live. We're not saying that and in saying that, sorry, I'm not saying that this program is only for veterans that have a lot of money to put down and they, want to spend a lot of money, right? A veteran is a veteran to us. If a veteran wants to buy a $200,000 property or a $50,000 property, it is on us to make sure that they have that ability to do so if they qualify. So we want to make sure that we give every veteran a shot. So I wish I had kind of like this silver bullet, right, to say, hey, look, if you target this particular area, you're going to get a whole lot of veterans. We're everywhere. And I will say, though, if you're not marketing VA loans, if you're not marketing to veterans, you're costing yourself money. And if you don't give a veteran the option of a VA loan, you're costing them money.
Agreed. And so we also had another question from Vasily Push, which asked, what are the top 3 or 5 questions to ask to figure out if a person would want a VA loan, which I thought was an interesting question. I know my answer, but
number one answer is, have you served?
Yeah.
Number one question, have you served?
Yeah.
Right. And that is going to get to tell you a whole lot. The other thing to know about VA is 54% of our veterans that are utilizing the VA program now aren't even paying a funding fee because they're funding fee exempt, because they are receiving disability compensation. So that is
huge.
That is huge, right? Yeah. When I came to VA from the private sector in 2010, goodness gracious, in 2010, it was 28%. 28% were exempt from paying the funding fee. We're at 54%, and we've increased, volume, but by over 650%. Last year, last FY, we closed 746,000. So last FY ended 9/30. So we go off of a 9/30 to 10/1 fiscal year. We closed 746,000, a little over 746,000 guaranteed loans. That was the 5th highest on record. In purchase loans, we had our 3rd highest ever year at 410,000 loans. And for cash out, we had the highest year ever recorded. We had 207,000 loans. So if you're not doing VA and you're originator, costing you money. If you're not giving veterans the option, costing them money.
Mm-hmm. Agreed. I'll just briefly share. I have a new construction client who is already locked at 5.25 from months ago on a 30-year fix. And they're, yeah, nice, right? And their financial advisor said, well, why don't you consider an ARM? Because we do have to do an extension. The house isn't quite ready yet. And again, it was just, it's an education piece, The financial advisor had seen some sort of advertisement that ARMs were in 2%. And I said, I'm pretty sure that's an advertisement. And you'd have to put down 20% to avoid MI. So I did the calculations. I'm like, it's going to cost, and right now, even ARM rates, you would be maybe breaking even paying points. Why would you do that? When you have a 30-year fixed already in place with, very little down, you'd have to put down, another $110,000 to avoid the MI. I appreciate the input from your financial advisor, and would you like to have a conference call so we can get on the same page? Because I don't think there's just and again, it's always a gap of misinformation, best of intentions, and of course I'm just like, I'll do whatever you think is best for you. So if you want the equity, okay, but why would we put you in an unstable moving interest rate when you have a fantastic one locked in? So it's fascinating to me. So real quick, let's if we can, let's talk about tech and modernization. I'm super excited to hear what the VA has been up to and ready to share with us.
Well, we're excited. For a very long time, we have seen, I would say, programs and services and the technology space kind of fit the bill, for our lower volume, and we've experienced exponential volume over the last 10 years, and the technology has just frankly become dated. It's become problematic. It's hard to use. It's not really keeping pace with the speed of business, if you will. So we've been fortunate in the last year or two in terms of getting the necessary funding and projects and focus internally on improving that technology. And it's funny, when you talk to someone in the technology field, they talk about all the cool bells and whistles that they're going to create for their clients and all of the neat stuff that's going to be available. But for our program, the easiest solution for our customers, our lender partners, our servicing partners, our appraisers, is to make data exchange and data delivery as seamless as possible. You know, don't make that loan processor or that post closer leave their system of record, you know, their loan origination system, to come to VA to do something different, to log into our system to do something different. So we're laser focused on creating those back-end data exchanges so that, you know, when you're originating that loan or closing that loan or doing post-closing guarantee work, that can happen system to system rather than a person physically logging into our systems. It sounds simple, but it's really revolutionary, because I think, you know, if you look at other investors, other agencies, we haven't been able to kind of separate ourselves in that way and kind of position the technology so that it really allows the client, in this case the lender, the partner, to kind of, you know, work in the system that they're comfortable with and not have to learn something else. So that's really our focus, is those business to business data exchanges on the back end of the tool rather than logging into a different system.
And how much of that is already in place, or what's the estimated rollout? Or
yeah, that's a very fair question. We, on the Technology Knowledge Center, if you Google VA Technology Knowledge Center, we have a whole bunch of information around rollout and specifications for your you know, technology partners. You know, regardless of whether or not you have a system that's homegrown and been built, or a system that may have been purchased to use. So we have a lot of that. We've actually already started down the path. Back in April was the very first time that VA could consume what's called an XML file. It's a data file for the closing disclosure and loan application. That was in April of this year. We're rolling out here in the next month or so the ability for lenders to, and LOS systems, to send that data to us automatically, right?
oh, fantastic.
So that's really neat for those loans that are audited or called for audit. In the future, the hope is, and our vision is, to really have this data exchange for all loans. And it's not just so VA can have the data, right? Our focus is serving our lender partners and our community so they can make better loans, you know, actually correct errors before they really happen, right? One of the things I'm really super excited about is what we call the pre-close API. So imagine you're working, taking a loan application, maybe working a loan application a week or two later, and your system automatically is submitting data to VA to double check to see if we see anything that possibly is a red flag, or something that, if we waited till after closing, would result in a correction. You know, those corrections get expensive and they take a lot of time. If you can prevent the problem from happening, you know, in the first place, we think that's a good thing. So that's just some of the kind of a taste of the work that we have coming by way of technology improvements and enhancements. Very excited about it.
Fantastic.
Okay.
Well, we'll put that on the link as well. The link that you mentioned in the description as well. And I just want to be so respectful of your time. Thank you, gentlemen, so much. I know you're very busy, both of you. And I thank you so much for spending time with me today. The loan officers will find it, and branch managers and CEOs and of the mortgage companies will find it so useful. And thank you.
Thank
My
you.
pleasure.
Appreciate it.
you,
Good to
sir.
see you. All right.
Thank you for your service, John.
Thank you so much. Bye.
Bye-bye.
Thank you.
Hey, I just wanted to thank you for watching the video. I hope you found it super useful, and you can go and make some more loans and help some more veterans and be productive with your day. While we're in a position of being blessed, and actually when I'm not in a position of being blessed, I find the greatest thing that I can do is actually focus outside of myself and do something for others. So we're going to put the Veterans GoFundMe link also below. So maybe it's something that you donate to every time you close a VA loan or you get a VA referral. So just a thought. As always, cheers to your success.